We ready to get started? Long webinar today. The Fed's still rigging the game. All right, guys, have a good rest of the week. I'll see you next week. Good? No good? You think I'm kidding? You think I'm kidding? All right. Let me get some charts off of here. I'm dizzy as it is already. All right, so yeah, we have a menagerie of a market here on our hands. Honestly, yeah, and you guys know, I shoot it straight with you guys. Here, right now, the way we're set up, I have no idea. I have no idea. And you know, it's so funny because this is always a good reality check for me. Like without I get this question a lot. Like, do you ever do your own stock picking? Do you ever buy, do you ever take a shot and get long without sweeper confirmation, shit like that? And here's reality for me. Here's the true test. I mean, the sweeper activity on the call side right now is as pathetic as you're ever going to see it. Even in rough markets, usually you get these pockets of where even bears aggressively need to short their hedges, or tactical bulls look for a squeeze. And at the least, you get intraday action, especially, the moves are not bad on an intraday basis out there, a little one-sided at times, but you at least get some action, one-sided action pockets here and there. You're getting it on the put side, no doubt, plenty of it. But the call side, there's such a buyer strike out there right now that even for short-term squeezes, the flow's been abysmal. And it's not to say there's not a single call buyer out there. There's going to be this isolated call flow where you see XYZ catch a six-figure sweep, and it's one order and that's it. The problem with that stuff in this environment, you can't do a damn thing with it because you have no idea off that one order, if that player is even thinking about a direction with that order. You know what I'm saying? So like you can see legitimate size call buyers here and there. And when they're isolated and all by themselves, and the key word's pattern, when you're not seeing any pattern behind the buying, whether it be short-term stuff or long-term stuff, if you can't pick up on patterns, you're really grasping at straws if you're trying to get any sort of edge off the action. And it's that simple. Now, on the bear side, right, it's been the complete opposite. I mean, the put sweeper activity has been incredibly impressive. Okay, and that's not always the case. It's not always the case, but there's been some good looking put sweeper activity, not just even size wise and order wise, but you're seeing that aggressive nature behind that flow. Where they keep coming, stocks bounce or the market bounces, and you're thinking maybe, okay, here comes some momentum players on the call side, and no, boom, they just keep sweeping puts into the little bit of a relief rally that you see. And yeah, it's been impressive. It's been impressive. And normally you don't see that in corrections. You see that in bear markets, excuse me, that have some length behind them, because the majority of the time players are just looking to hedge, and they stay hedged. Once they're hedged, they stay hedged in corrections because they're a lot quicker. But right now, it's been, and again, it's nothing new, right? It's nothing new. So I'm not sharing anything new with you guys. It's the same old, same old. Okay. Aside from that, big picture wise, And the only thing that matters here is that, again, the Fed is rigging the game on the other side, right? We know that already. We've been aware of that. The question is, and what players that I speak to on a day-to-day basis, what they're looking for as far as clues is to see, not, again, in the immediate future, unless something goes boom, unless something breaks, right? We spoke about this. The Fed's, there's no shot in hell they're altering course, right? Again, you heard Powell and somebody else who was speaking today. They flat out told you again. They right to your ears. All you got to do is open your ears. Inflation is a much bigger concern than any sort of recession right now. Okay, it's not even a question. So, slow down, deteriorating fundamentals like we see on a day-to-day basis, they're not altering course off that. Okay, again, over the short term, something would have to bust, and the market's going to pay the price for it, right? The price action, you'll see it in over the short term, and then you'll get them to alter course, right? So that's the only thing possible right now for that scenario to play out. So everybody else, what we're looking for now is, because you got to understand, the market always looks ahead. Okay, while everybody is waiting for the Fed to possibly pivot right in front of their face, visible to everybody, the smarter money in the markets out there are going to sniff it out, likely well ahead of time. Okay, and that's what a lot of players I talk to, even we spoke about it, right? That's why we're even here right now. Plain and simple. That's why we're here, is to look for some of those early signs, early clues that may be, again, the start of it may be in play. Okay, the start of it. And what we're going to see, again, this is all stuff we spoke about, what we're going to see likely transpire when we start seeing those clues. We're going to start to see extremely selective stock picking out there, right? Again, not in a rush, not because the stock may move within the next week or two. They're looking out a quarter or two at the least. So we would start to see early signs of accumulation that would likely transpire over days, weeks, maybe months, right? So it's something we have to stay on top of and keep an eye out for. And like the point I'm trying to make is, it's not going to be like we're going to ooh and ah off of one day and we found what we're looking for. Okay, the one day, anything we're oohing and ahhing off one day is likely just for a bear market squeeze, right? There's that possibility that for whatever reason, I'll give you an example, tomorrow you got that PCE, widely watched, comes in soft, right? Doesn't come in hot. You could legitimately get a bear market squeeze from here. No doubt about it. Wouldn't shock anybody. Okay, nobody is positioned on the equity side. Nobody, right? How long it will last, how big of a squeeze, the gods and Powell only know, right? But you can legitimately get a bear market squeeze, no doubt about it. Okay, so that's the stuff we are, I guess, on our toes for, right? That's what we're looking. That's what we would ooh and on a day-to-day basis, and try to hop on that for a ride. But bigger picture. Yeah, there's just a lot of work. And I hate to get caught up into that loop, because a lot of times you get caught up into that loop in this game where you see what's taking place big picture wise, and you get negged out because it's a lengthy process. But time flies, especially in this game. Time flies, and anything can happen. So I don't want to get caught on into that loop that this is going to be a stretched out long-term process, but that's what it looks like right now. That's what it looks like right now. The Fed's got more rigging to do. There's no ifs, ands, or buts about it. And there's nothing we can do about it. And right now, with the backdrop the way it is, they're not even giving longs even a taste here. Not even a taste. Not even a taste of playing any upside. You can try to catch upside right now in this environment that we've been in right? For, I don't know, maybe a month or a few weeks. I can't even keep track of time anymore. But, you're really relying on your trading skills per se, right? Yeah. Like you got to be Houdini to really try to find the right entries and exits on the long side on anything overnight here, right? Like you're really asking a lot of yourself, and you got to be honest with yourself. You know what I mean? You're really asking a lot of yourself, right? It's a really small and tight window of trying to make any decent money as far as overnight's concerned. And you're going to need a lot of luck on your side, right? So the prudent move, the smart move, is to not fight that, not take that, not be arrogant and think that you could become somebody you're not, is to wait it out, Because again, I'm not even talking about market bottom and new bull market. It will get easier. There will be a period where it will get easier than it is right now, cleaner than it is right now. This is really, really tough. And don't think, the Bears, think about this, right? The Bears finally get their window here. Like you can't ask for any better of a backdrop if you're a perma bear. Okay. Just like we had, I say we, but just like bulls had for years, right? You had a Fed rigging the game to the upside. You look for any shakeout or washout in sentiment for a dip buy, and you look for new names that are getting swept as far as stock picking is concerned when that selling's over. So now you flip-flop that, and you got the Fed rigging the game to the downside, and they're not giving the bears that shakeout, that bear market rally, or anything worthwhile anyway, to find new short entries into. You understand? Like, you think bulls want some sort of bounce or squeeze here? The bears want it more than the bulls. Any real player out there, right, on the short side, and there's not many of them, okay, but any real player out there on the short side has been waiting for a legitimate bear market rally to find an entry to short. They can't short this. You know what I mean? They can't, like, think about it, right? A week or two, last week, you shorting to the lows, you get run over. You can't make a living shorting this. Even in a rigged game, that's the sad part for them right now. So they're pulling their hair out even more so than the bulls are, for good reason. For good reason. So it's tough right now. It's tough. And there's nothing wrong with sitting through and waiting for it, no matter what side you're on, right? So here's what it looks like going into tomorrow, rest of the week, or even into, next week. We're in the summer. Things are going to slow down a lot unless something goes boom, but things will be quiet, especially flow-wise in the middle of the day. Tomorrow, you have, again, we mentioned it earlier, you got the PCE tomorrow, and you have a similar setup like you had going into the CPI, where if you get a soft number, okay, with some of the slowing of the economy and stuff out there that we've been seeing, you can see how bulls and bears are afraid of an argument of peak inflation. The Fed has tightened enough and they may pause, right? It seems so far-fetched, but if you go before that CPI, when was that? A week ago? If you go before that CPI, if you remember, that's kind of what the noise was about, right? That the Fed may pause in September because things have been tightening enough. And then boom, you had a hot CPI, and that took that playbook and threw it out the window, right? So you have a very similar backdrop going into tomorrow. You get a sticky number tomorrow, right? That gets people a little rattled. That's a little too hot, and you can't argue that maybe we're at peak inflation, right? Maybe inflation's starting to just even starting to slow. Like, think about that. We're not talking about rolling over. We're talking about inflation starting to slow. And the difficult part about this is that each and every inflation number that comes around, what do you think? It's just going to be one after the other. Good news, good news, good news. This thing is probably going to be up and down and up and down and get people thinking in each and every direction imaginable. You know, it's going to be that type of mess. So that's what we have going into mañana. That's what we have going into mañana, right? And we'll see it. You know, you're going to see it pretty visible by the open of the market. And who knows? Maybe we'll even see some call activity. Regardless, we'll probably see some sort of activity, even if they're playing the downside again. What to root for here? If you're a bull, you need things to come unwound, unglued, but it's not happening. It's not happening. The Fed, everybody can knock the Fed all they want. So far, this is a masterpiece for them. You realize that, right? And again, it's probably not going to end up this way. We all, I think, are on that page, right? But to this point, okay, this right now, with the economy starting to slow, a lot of the speculation getting wiped out, money supply, you name it, everything they need to happen is happening, right? And they could see that the light at the end of the tunnel. The problem is that light may be a freight train, right? Because things can unravel quick in this game, quick. But right now, this is exactly what they want, right? Exactly what they want. We don't want it. We're impatient. We don't want it. But this can go on for as long as they want, as long as they would like. And they can sound hawkish and continue to do their thing. As long as the credit markets, nothing freezes, nothing cracks, they don't mind. They don't mind this one bit. All right. Sentiment and all that stuff. Again, I don't like to label it as useless, but where we're at is pretty useless. Okay. Because we've been at the same point for a while. Okay. Nothing out there, especially on the institutional side, the professional side. Nobody has any exposure to equities right now. Nobody. There's no long exposure to equities. And that's why you're seeing, some of the smart money even take the other side, right? Kind of like what Sharpies have done into the recent lows recently, where they remove hedges, get long, because that opens up the window for some sort of bounce, some sort of squeeze, right? Literally, they have no exposure on. CTAs are short. Hedge funds, they covered, but they were short. Now they're flat. Name it. Advisors, negged out, suicidal. Nobody is long equities, okay? The problem is, okay, that for where we're at right now, this type of cycle, this magnitude with the Fed rigging the game, for you to come to the conclusion that the selling may be done, big picture wise, you need capitulation. You understand? We are not in a bull market pullback. We are not in a correction. That's over with, right? We all agree? This is not your run-of-the-mill correction here. Okay. I mean, we already could come to that conclusion once we swallow the pill that the Fed is really going to rig this game to the downside. I'm not going to lie to you. I didn't believe it. I know that's what it looked like, and that's what they were saying. I didn't think they'd go through with it. Okay. I'm being dead straight with you guys. But once we've swallowed that pill, you can't look at this as just, a 2011, late 2018 type of correction. It's not that. It's not that. Usually when you see this type of bear market, with this much damage. Think about the damage on an individual name basis out there. Like, it's no joke. There's some serious, serious damage. If this was your quote unquote correction, these things would have been bought up ages ago. Ages ago. Okay? There is serious wipeout out there. Anything that resembles speculation. So when you see that type of action, okay, usually it ends in some sort of capitulation form, some sort of bang, right? Where, in other words, there's not anything that's left undone before the market turns, okay? So even though you have a lot of players out there, professional, even tactical retail, that have no interest in being long of equities, okay? You have a lot of passive money, right? That's been pouring into this market in late 2021, okay? That's sitting on a pile of equity exposure, just sitting there, okay? Underwater. Now, if you think this comes to an end without them puking up, I'd be shocked. Okay. And just so you get an idea, I would be just as shocked as when we were talking about when they didn't come into the market. And you remember we had this conversation on these webinars, and we said that it's hard to believe that this market, the music will stop on the upside without them coming in, right? It doesn't work like that. Like, the music doesn't stop in a bull market like that on the upside until that passive fund flow comes pouring in, right? It usually comes pouring in up near the highs, okay? And that's exactly what happened. On the flip side, these cycles on the downside don't usually end until they puke up, right? And you guys, I call it the scariest chart on the street right now, to me. Let me see if I could dig it up. I wish I don't have emojis on here. I need emojis. Hold on, I probably have it somewhere over here. Anybody have it handy? You know what chart I'm talking about. Let me see. Floats, maybe it'll be on the, let's see. Damn it. It doesn't even keep it that long. I'm trying to think. I don't even need an updated chart because it's been the same for a while here. Oh, maybe it's on here. Hold on. Let's see. Goldman. I usually post a Goldman one. Nah, that's not the chart I'm looking for, though. Oh, let me see. Hold on. I should have had it handy. I always think I'm going to find these things easy. They never come easy for me, you know? Never. Oh, that's not it. That's one of the charts, but that's not it. Let me see, plural, I think I usually do it. There it is. Thank the good Lord. Okay, here we are. So this is what anybody who's new to the webinar, and you have no idea what we're talking about, this dark blue line right here, USA, see right there? Okay, here's late 2021, and then there's all the money coming in at the end of 2021. You see how we were in a rigged game, right? From the 2008 debacle, right? Hold on. We've been in a rigged game to the upside, rigged bull market since the 2009 low, right? And you see, this is from 2016. Look at this, like a dead heartbeat. No money from this crowd coming in. lo and behold, right? And this is what, again, I got deja vu. For those of you who were around long enough, know exactly what I'm talking about. We used to come on these webinars when the market has rallied significantly, right? And we go through a little correction and we would ask the question, is this the big one, right? Is this the big one where the bull market's over? Okay, or is this something where we can lean on some of the sentiment and positioning stuff we look at, short to intermediate term, and try to find a low and just start accumulating, right? Sweepers would pop up without even in an instant as soon as we corrected 10%. Okay. We said on those webinars that something like this usually has to happen at the end before the music will stop. Okay, it did finally at the end. Now, for this cycle we're in, right, there could be bear markets in between. This thing usually gets wiped out. Okay, the majority of this, and then we go into a period like this again, where they're so disgusted of coming in at the tippy top that if you mention stocks to them, they'll punch you in your mouth. That's how pissed off they are. Right? They feel like suckers. We came in late 2021 and I put all my money in it, and that was the tippy top. And for years, they won't want to touch a thing. That's usually the final chapter of this. Okay, so that's what, again, a lot of people I talk to who follow the same stuff, this concerns them. This is concerning. You can see the reason why it's concerning. This is concerning. And a lot of people, their opinion that I talk to, they think the reason we haven't seen that pure capitulation, right, that you hear about, again, meaning that you really see long investors throw in the towel. Okay, right? You get explosion VIX, put the calls, everything triggers because there's legitimate vomiting going on. And the reason they think we haven't seen that is because look at this thing hasn't budged. Okay, it's actually higher than where it was. I don't think this is updated. Last week they spit up a little. I think for the first time in the last 4 weeks, there were outflows. So this is in the way. Okay, again, not to say there's not, bear market rallies that could be a lot stronger than what we've seen. Very possible. This has nothing to do with that. But we're talking about big picture changing, right? That's what we're talking about, the start of a new bull market. This usually, we got to get to the final chapter of the book here. All right. So again, depending on your time frame, it might not be as important, right? Or if you trade a bunch of different ways, you can definitely alter the way you trade, right? Time frame wise. But I know a lot of you guys like to talk big picture, and this is the scariest chart on the board. This is the scariest chart on the board. Now, people want to talk capitulation, and their markets, there's always ideas, might find opportunities. In other words, if you don't have things coming unhinged here, if you have a period of time through this summer where nothing comes unglued, okay, the US markets still could be the same shit show that we're seeing right now. And we're not bleeding out. We're just in a hot mess, right? There very likely could be opportunities elsewhere, right? And, if that's part of the game, you can look to that. The problem with that right now is I think we like to look at it just one-sided. And I'll give you an example, okay? We've been seeing bull flow stem up in Asia, China related stuff. Okay. again, I'm not talking about the dollar stock that ran up in the Kathy hype. I'm talking about ASHR, FXI, BABA, KWeb. We've started to see some pattern call flow, right? Bull flow stem up in this stuff. Okay. The main issue with getting jumped up and say, oh, I'm just going to buy China and it's a place to hide, is that what a lot of players are more than likely doing, if you can believe it. Okay. And this was the opposite up until now. They're getting long KWeb and getting short something here. You understand? And we're seeing a lot of that go on. Pair trading. There's a lot of pair trading there. So not only that, they hedge by getting long something and short something else. So they're not totally exposed, right? They're not totally exposed to equity risk. So, those are things a lot we don't look at, right? A lot of us don't look at these sort of things. We just like to get long or not get long or get short, right? But this is the climate we're in. This is the climate we're in. So as good looking, or as, I wouldn't say good looking, as bullish as some of the flow in these Chinese names have looked, you have to take that into consideration, that they might just be looking for outperformance. That's it. In other words, Asia outperforms our markets. Doesn't have to go up a lot. You understand? I mean, a lot of times, exactly. What's funny, H.E.? For the first time in a long time, hedge funds are being hedge funds. Is that crazy? They all went out of business because they couldn't. I mean, if you were a hedge fund and you were hedged anything in a rigged market, you were an idiot, right? That's what the problem was. That's why they were always late to the party, right? Always shorting into the lows and going all in at the top, is because any hedges in a rigged market was ridiculous. Yeah. It's true though. I mean, that's what this market has become. So, again, I don't want to be the wet blanket, but you gotta, right now, the way things are right now, you gotta take everything with a grain of salt, because there's nothing extremely bullish, right? And think about this. We just spoke about this, right? With commodities, okay? Everybody, there was a lot of money made in these commodity names and energy names, but everybody thought that you can hide in these things forever, right? And there was no risk. Oh, it's inflation, and you see what happened now, right? Exactly. They got beat up. There's no easy money out there. There's no easy money at all. Unfortunately, there's not. There's nowhere to hide. And eventually, when they smoke enough people out of every hole, you reach a point where you're closer to the end than the beginning, put it that way. But there's no, trust me, nobody wants to find it more than me. There's no remedy here. There's no remedy. I don't know about you guys. Well, I see some of you guys are doing okay, and the majority of you guys are playing both sides. So that's a plus. Okay. But think about it like me. You think I'm not pulling my hair out of my head? I'm not, I play the equity intraday when I'm solely concentrating on intraday like I am now. Okay. So I'm not shorting. So I'm long only, right? So think about it. What am I doing? Whatever I'm doing, the majority of times on a day-to-day basis has been futile at best. You know what I mean? At best, there's been nothing. I mean, there are more days now where I can't even if I want to force myself to buy, knowing that I have my risks managed properly and it's not going to kill me, I still can't get myself to buy. I can't find a thing. It's all been on the short side. It's all been on the short side. And like I said, they're not offering up the best entries anymore on the short side. That's the problem. There's one little window to get in when the momentum starts to fall apart, and you see put sweepers going bananas. But then after that, it's like every rally, every bounce attempt gets sold. And like, look at today, look at this today. What are you gonna do with this? Especially with no decent sweeper activity. What the hell are you gonna do with this? Yeah. And HC, you know what's funny? That's right now, okay, right now at this current time, who's picking up the money? What HC is talking about right there. That's who's picking up the money. Players who are writing and collecting premium. But I got news for you. They'll get their beating. Oh, they'll get theirs. You watch. They always do. They'll get theirs. They just like everything else. They'll reel in enough of them. And then when it's lopsided and they think it's easy money and they get out of their shoes a little bit, the market gods will give them a beating they'll never forget, and more than likely wipe them out of the game. Yeah, it's how the game works. It's how the game works, right? See, we just saw it even in the commodity energy names. Just when people thought you could hide in those things, right? Because oil is going to continue to go up and inflation, blah, 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 blah. All these things. Personally, I couldn't believe like how, because, I haven't been staring at these things. I couldn't believe like how much some of these things came in, They really came in a decent way, these things. Look at this. So, right? And you remember the conversations we were having here when this was going on here? Right? The money was made here. Man, maybe you find an entry and you play musical chairs to where you could get in, get out before this comes. But now what? And, these might be closer, believe it or not, to setting up again than the rest of the market at this point. RH Warren. Oh, yeah. Well, he's usually knows his shit too, right? He's right on top of things. What's his face? Look at this RH. And guys, again, I tell you from experience, and experience a lot of times can't make you money. It prevents you from losing money, but what we're seeing here can go on for a lot longer than we would like. Okay. And what usually happens, nobody is interested in trying to own these things or pick a bottom in these things when the selling's done. Like first you get dip buyers thinking we're still in a bull market. Then you get investors who see, a huge sale on a name that they wish they could have got in, but the stock tripled on them, right? Then you get value players. Eventually it gets to boredom, right? And then uselessness. Like people don't even talk about these names like they don't even exist anymore. You don't even hit the takers up anymore, So as a matter of fact, what that just reminded me of, they just piled money into this ARK again. Okay, they just piled new money into this ARK again. I don't know. I don't know how. I don't know. What happened? Listen, you had the government basically introduce this game to every jabroni on the street. Everybody and their mother all of a sudden became interested in the stock market. So, now there's still money out there. They're not starving yet. The economy didn't hit the skids yet. The economy's still decent, right? Inflation eventually will bite them, if anything. But, people see ARK. Oh my God, this thing was 170. Thank God, I didn't own it. I got out of it. Let me buy it at 50. Let me buy it 60, 50, 40, 30, 10, 5, blast off. You know what I mean? That's what they do. That's what they do. But the end result, you get, again, this thing, usually, not everything, but you get the hockey stick. You get the hockey stick. And then it's more about time than anything else. Yeah, but there's no way to show it. This is a shit show we got, you know? Every time I try to look at the glass half full, I remind myself that this is a real shit show. We got a big disaster on our hands. We got a big disaster on our hands. And I don't think anybody has any clue how this plays out. I know nobody has a clue. You know what I mean? You can slap probabilities and odds on it. Right? The Fed breaks something, I'm sure it gets decent odds. Soft landing, I'm sure you'll get, some juicy odds. But nobody knows. Nobody knows. Nobody knows. If inflation happens to roll over, which, cannot, right? Who knows? We all have our opinions. They mean nothing. They mean absolutely nothing. But anybody have any questions on any of this? And there's a couple indicators we look at that are simple to follow. If you don't want to look at every single one of them of the stuff we discussed today, like I just came across it as I was looking for this. Hold on. Okay. So look at this. All right. You can see this is the Goldman, the sentiment indicators we look at on this webinar. Okay. You can see a lot of these things, right? They're all coming here, basically wiping out flow hasn't budged. You're getting enough of these things. Like this is a lot of sentiment washed out. In a non-rigging process, we would have bottomed and we would have had a huge, not even huge, but a lengthy bear market rally that we could have ate off of, without a doubt. Would have lasted probably a good 2-3 months. And there would have been some nice moves, stocks doubling off the lows easily. And then, once sentiment got washed out, in other words, you got all this going back in this direction, the market would have rolled over again. But the difference now is you got the Fed preventing that. You got the Fed preventing it. But anybody have any questions or was curious on any of these, any sentiment or anything, or had anything to share as far as this concerned? Jamie Dimon, what do you say? There's a hurricane coming, right? Hurricane? We need this. We need something to break. I hate to say it because, it's not a good thing to root for. But we need the Fed to stop rigging the game somehow, some way, somehow, some way. Like, let's see. Oh, come on. Never works the way I want it. Never, ever, ever. Hold on. What about if I do this? Yeah, oh, here it is. Okay. So if you remember, this is the indicator we're looking at, right? The financial conditions indicator, right? This is the Fed rigging indicator in simple terms. All right. So this is all we've been sitting through. Okay. So the Fed saying themselves, they need to get it here, to take down inflation. They need to get it here. So that's a lot of weight on risk assets to get it there, because you look at what makes that up. credit spreads, right? They're going to widen out, right? We look at that chart religiously. Spreads, you throw it up over the S&P, right? Mirror, inverted, mirror image, mirror image, mirror image. And you can't even make it up. Mirror image. That's what I mean. This is not conspiracy shit. Wait. Look. Okay. The Fed is artificially, is the word, forcefully, whatever you want to, adjective you want to use, going to do this. Okay. Forget what this is. Forget why it moves. Forget all that. If I was to tell you, like I'm talking to a caveman, the Fed has to rig the game to take down inflation. The process of rigging the game will get this is to cause this indicator to move higher. Okay. What's the main takeaway from this thing you're looking at here, right? Like, you can't look at this. From the start of the year till now, literally a mirror image. So if I was to tell you that the Fed themselves said that this has to go higher, okay? Their battle against inflation, they need this to go higher. That's their tool. What is this going to do? Right? It really is. It's organized selling. You're right, Dominic, but that's what I'm saying. Like, I sound like a conspiracy theorist, and a lot of people who know me should know better, right? I'm not a Fed basher, right? I'm not a perma bear that has been screaming at the Fed, blah, 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 since 2008. Okay. What I'm saying is that it's common knowledge, right, that the Fed is doing this. This is not a rumor. This is not just chatter. This is the Fed's tool. Raise rates, drain liquidity, tighten financial conditions. It creates this. Okay. And we were looking at this on the Sunday, very orderly, right? Now, if you look back through history, okay, let me find, actually, I don't have, I can pull it up though. If I can't pull this up, I'll just shoot it out quick. Hold on. But look at this, just so you guys get an idea. All right, this is another form. This is corporate bond yield spreads, okay? If you look back throughout time, since the Fed has been involved, okay, every time they attempted or needed to do something like this, like right here, 2016, or anytime the economy, financial conditions started to tighten on their own, the Fed didn't do it. It's just economically, regular economics, right? The Fed would come in and rig the game the other way, right? They would provide liquidity and loosen financial conditions, right? That's a fact. By doing that, they artificially created tightening of spreads, which creates this, okay? So in 2016, when financial conditions started to tighten on their own and the Fed got concerned, the Fed rigged the game and loosened them, okay? And you see this? That's all clear. Boop, bottom, bull market, okay? COVID, again, wasn't the Fed's doing. A pandemic, tightened financial conditions. The Fed came in, central banks across the globe, they threw in the kitchen sink, all right? Providing liquidity, they threw every measure they possibly could, they rigged the game. Okay, everybody was happy they did it. Otherwise, who knows what things will look like right now. Okay. COVID, financial conditions tightened on their own. The Fed rigged the game, all clear. Right? Back here, 2011, same shit. Okay, look at this 2000. This is where the start of it. Look at this, the 2008, 2009 debacle. Okay, the difference now is, okay, the Fed came in to rig the game here on the opposite side every time. Okay, now what we got going on is these things aren't, financial conditions aren't tightening on their own. The Fed is creating that. So they're doing the opposite here and creating this. Okay. And they flat out, again, they told us today, this is their tool. They want this. They listen to what the Fed says on a day-to-day basis. They need financial conditions to tighten further. Okay. In simple English, that means this. Where are we going? What do you want to do right now? You know what I mean? What do you want to do? So until something happens, right? You get something freezes up or something breaks, you'll get an acceleration like this. Okay. Then the Fed likely will say, that's it. We got to stop rigging the game, and possibly we got to take the other side right now. You know what I mean? Could be systemic, could be a problem. So either something's got to go boom, something's got to break to create this, and then we can play the game again, or it's time and this will do it on its own, like what's going on now. And that's what the Fed wants. The scenario B, the second one, is what the Fed wants. They don't want something to go boom. They don't want something to break. They want it nice and easy. High spreads. No. When this is going up, spreads are widening. Tight spreads is when the Fed is backstopping. So you understand, here we're coming from really low levels across the bond market. High yield, this is just corporate bond. Okay, we're coming from really low levels from the Fed rigging process. Don't forget, remember during COVID, Presley, the Fed actually stepped into the bond market literally in HYG, right? So spreads become tight, so tight because it's flush with liquidity. When financial conditions tighten, spreads widen out, the liquidity evaporates. No, because what you're thinking about financial conditions tightening, not spreads tightening, right? So think about the equity market, Presley. When there's volume in a stock and it's liquid, the bid and the ask spread, they tighten up. They're close. When things go illiquid in the equity market, what happens to the bid and the offer? Right? The illiquid names, you get $1 spread. Or think about options, illiquid options. What's the spread between the bid and the offer? Right? But the liquid names, they're tighter because there's liquidity. That's what this is showing. Right. Low liquidity, right, is a poor environment. Exactly. You know, so it's the same like every market. But again, it can, all this, listen, I'll be the first to, all this Fed shit can make you dizzy. You don't have to, if you're interested in it, that's one thing. But if it makes you dizzy, you know, you don't have to get too wrapped up into it. You know, sometimes it's as easy as just seeing a trend, you know, just seeing a trend. When you see shit like this going on, right? This is not a playbook for every environment. When you're in a bull market, I never look at credit default swaps because they're not doing anything. They don't matter. You understand? when the Fed's rigging the game to the upside, you don't look at this stuff. There's no one going bankrupt, zero rates, and the economy flush with liquidity. It's when shit hits the fan. And that's what this is showing, this credit default, a higher risk of default. This, you know what I mean? That's what it's showing. Yeah. I mean, bonds in general, but yeah, corporate bonds, because people think of it as a sure thing, Lourdes, right? It was a sure thing. Because here's the thing, Lourdes, when you got a Fed rigging the game to the upside, like we've had, nobody goes bankrupt, Lourdes. We didn't hear of a bankruptcy. Think about what we went through. We shut down the global economy because of COVID and nobody went bankrupt. Isn't that nuts? So the corporate bond market was a lock. You don't lose money. How do you lose money? Nobody's going bankrupt. So now that risk comes back into play. You understand? But that's what the Fed wants. That you can't have what we had off COVID forever. You understand? You can't have that. There's no risk. You know what I mean? There's no risk. So this is the Fed's attempt. They're going to take down inflation and at the same time try to normalize things out there. And it's going to create pain. It already has created a ton of pain. But they don't really give a shit about stocks going down after, scroll back on your charts, guys. Look, you know what I mean? As long as it's orderly, they couldn't give a rat's ass that equities, Kathy names are getting hit over the head or SPACs are going to zero. They want that. You can't have any jabroni out there just buying a name off Reddit and getting rich. You understand? They gotta flush that down the toilet. They waited too long. Oh, we're all saying how crazy it is. Can you imagine them? Oh, yeah. Manipulate. Again, we're talking, I'm not exaggerating. We're talking about a rigged game. Rigged game. We didn't even talk about what goes on in the currency markets as far as manipulating is concerned. There's more manipulation than we can possibly imagine. We don't even want to open up that can. You understand? There's no question about it that there's manipulation out there. I mean, it is what it is. Right? It's not a free market anymore. That's gone. But it's just right now on the long side. Well, right now on any side, it's really, really tough. It's a tough time. But it's not going to remain like that forever. Maybe some length behind this go around. We're due. But the tide will turn. And more than likely, guess what? The Fed's going to have to rig the game again. That's the problem. Once you start rigging the game, that's why people never wanted it to begin with. Like I remember in 2008, right? Guys like Santelli on CNBC, the nut, okay? I remember him fighting with Steve Eastman every day because he was the free market capitalist crowd. And their argument was, you can't do this, okay? You can't bail out whoever you want. You can't rig the game because there's no going back after that. You understand? You're picking and choosing winners. That's not a free market. So free market, what you do is you let things burn, okay? And eventually prices will get to a level where people will see value, right? Investors will see value and they will do the bailing out. If things continue to burn, then obviously they're overvalued, right? That's the free market principles out there. But what Bernanke and the Fed learned is that companies were too big. They got too big that if they allow that to happen, they could take down the whole fucking system. You understand? They could take down the whole world economic system as we know it. So Bernanke and Paulson back then, they found out the hard way after letting Lehman go. We have to rig the game. We have no choice. We're on the precipice of game over here. But people were saying it even back then. Once you start doing that, when do you stop? How do you stop? There's no stopping, right? How do you stop once you started? So it's like the Fed has a remote control, right? They blow up a bubble and then they deflate it. Then they have to blow it up again and then they deflate it. There's no other way. Unless we go into Armageddon. You guys ready for Armageddon? I got my bunker. I'm all set. I'm prepared. But that's the only solution. That's the only solution. But listen, not to get too carried away here. All right. It's the same old story, right? And this is what we come to talk about on these, Wednesday today. The Fed rigging process is still in process. Tomorrow, we get some information that either will give the sense of maybe they'll pause, or the opposite. Maybe they even need to do more, and that could get really interesting tomorrow. Stock up on beef. Yeah. I mean, Jim, the food and all, it can get scary if this shit doesn't roll over. You understand? If this shit doesn't cool, that's why the Fed's taking this. It's no joke now. You understand? They're not worried about a recession. They're worried about inflation getting out of control. And then you got big headaches. You got big problems. That's crazy. And again, I'm often wrong, just like everybody else in this game when it comes to that shit. You don't understand. I lived through 2008, 2009. Okay. So I heard inflation was a threat since then, all the way up till now. So I wasn't going to believe inflation was for real until I seen it actually happening right in front of me like it is now. All right. But a lot of us thought, because they were praying for inflation, they've been trying to create inflation. We've been in a deflationary spiral since then. Costco hot dogs, they're gigantic too, aren't they? Is that Costco? I remember one of those hot dogs from that place somebody brought me. It was like the size of a boat, that thing. It is, right? There you go, $1.50. Costco hot dog the size of your desk. Hot dogs. Yeah, I mean, and listen, you had, I don't want to get too market economic fundamentals and shit like that on you, but you got to understand, people were saving money for all this since 2008, right? And you put your money in the bank and you lose money, right? You put your money in the CD and it's as useless as forget it. No? So that's not good. And what happened was the Fed, by doing what they did, they forced everybody into risky assets, right? You couldn't be conservative anymore. You couldn't be safe with your money. You would lose money. So, now things are going to change, but think about it, like that was another argument for equities, right? Tina no longer applies, does it? Tina's out the window. I mean, we're going through a big shift here, guys, right now. Big shift. No? Like the only place you could put your money for a return was equities and real estate. Like now, you got eventually too, these bonds, you're going to have some yield there. You do now. Yeah, they always do. Listen, I'm in the game 25 years. So I've been around so many who've been calling for the end of life as we know it. And then we go into a bear market, they pound their chest, and then they stay bearish their whole entire lives and lose all their money if they have any money to begin with. You know what I mean? It cycles. There's a lot more bullish than bearish, but every day is not a holiday. I mean, look at this market from, this is nuts, from even just COVID here. Look, I mean, come on. We're complaining? Like, look at this. Right? And I guarantee you, every single one of you I know, because the majority of you who are here, from this point here up, knew that this was the inevitable when it showed up, right? Is anybody shocked by this? Be honest. Anybody shocked by we're going through something like this after this giddy up? I mean, come on. You know? It sucks without a doubt. Exactly. Like, you know, everybody knew it was going to be a tough time. I mean, the Fed was going to raise rates, QT. What? None of us thought this was going to continue. No, as a matter of fact, the total opposite. A lot of us were concerned and missed out on this because of the threat of this, right? That's the even more likely scenario for a lot of us. I know for me. You know, so now, you know, it's just a process of waiting. It's a process of waiting. You know, no one knows when it ends, but the final chapter a lot of times looks like what we looked at here, right? This is usually going to be at the end. Nah, I can't find it anyway. You know, Hartnett's talking about bonds have seen capitulation, not stocks. Where did I try? I can't. If I knew how to navigate private Twitter, I'd be in good shape. Yeah, exactly. Learn in the good. That's a good point, Matt. As corny as it sounds, you learn in the process. It's good to go through something like this, especially if you're a new player in this game. You're lucky. You're fortunate that you're going through something like this. The newer players are the unfortunate ones, are the ones who started playing here. Okay. Those are the ones, or even here, and made some money and thought they were the next Drunkenmiller, and now have made nothing but donations. You know, so it's just being patient and allowing things to shake out. That's it. Staying on top of it too. Spreadsheet, yeah, I need a doctor. Forget spreadsheet. I need a lot more than a spreadsheet. Anybody mortgage rates double last year's levels? Yeah, the housing market. Oh, this is what's his name said. Let me see what's his name said. Jim posted, the RH guy. With mortgage rates double last year's levels, luxury home sales down 80% in the fourth quarter, and the Fed's forecast for another 100 basis point increase. Our expectation that demand will continue to slow throughout the year. I'm sure it will. I'm sure it will. You know, and that one more last point, okay? We haven't even seen in the economy the ramifications from what the Fed has been doing rate-wise. We spoke about this. You don't see, they're not instant results. The Fed doesn't raise rates, drain liquidity, and you see a reaction in the economy next week. Takes 2 quarters, sometimes at the least. At the least. All right. So, you know, things might not look that shitty over the short intermediate term here, but likely they're going to end up shitty. You know, what's interesting is this earnings season, I know a lot of people are negged out. It's going to be interesting because, you know, off what the Fed's doing and the economy slowing, it shouldn't really, we shouldn't see an impact in earnings. If anything, inflation will have a bigger impact on this quarter's earnings. And for some companies, the big guys, it's not that big of an impact. You know, so it's going to be interesting to see, and that's going to be a bad thing because what's going to happen is they're not going to take down these estimates that much, you know. But that's the scary part. We're not even seeing the Fed's doing yet. right? We see these economic numbers every day slowing, right? That's not from the Fed. It's more from inflation and ports jammed up and all that shit. Third quarter 2023. Yeah, right. So that's Jesus Christ. But anyway, that goes back to the point that things are going to probably be really ugly by the time when this bottoms and turns. It's going to be extremely ugly out there. I gotta believe. A lot uglier than what we're seeing now. This is nothing. But the market will turn ahead of it. I promise you. It will turn ahead into the ugliness. All right, everybody. As always, I appreciate everybody stopping by, especially if I switch the days. I might have to do Wednesday next week or Thursday. Maybe I forgot they had the other webinar on Wednesday, so maybe I'll move it to Thursday. Yeah, they got the other webinar on Wednesday, but next week I don't think I could do Tuesday either. I got to take my daughter to the barn. All right. But always a pleasure, guys. Stay patient. Stay interested. It's all right to play. Don't get hurt. All right. Wait for the better times and learn in the process, my friends. Learn in the process. Have a good night, everybody. Tomorrow morning should be interesting. Bright and early. Definitely play safe. Have a good night, everybody.